Hey guys, it's your boy Nathan, the coach here with Win with Nathan here at the Lender. Guys, this video I'm excited for. You could probably tell in my tone if you watched the last video. Guys, let's talk about the 5 reasons most people have bad experiences with DSCR loans, right? DSCR is a phenomenal product, but a lot of times people have this negative tone about it, right? So let's dive deep into why that is, right? This is going to be fun. So let's talk about reason number 1. And I think this pretty nails everything, is lack of clarity, right? Lack of how it works. Like, everyone thinks it's kind of special. It's a special loan. People think it's like one of those loans from the 2008 crash that all these people that don't understand the loan, they're like, oh, everything that caused '08 were all these loans that are not backed by agency type products, whatever, right? And there's a lack of clarity. So let's define this. And I don't want to argue with anyone, but what is a DSCR loan? It's a debt service coverage ratio loan. And here's the biggest question of the day. Is DSCR a conventional loan? Guys, here, if you follow CFPB, which everyone is supposed to be doing, and it's the #1 agency out there, whether Trump gets rid of it or not, the CFPB defines this. Any mortgage that is not a government loan, which is VA, FHA, USDA, right, is a conventional loan. So if you follow the CFPB, DSCR is a conventional loan, right? Because it's a mortgage on a house, and the CFPB just says any mortgage on a house that's not backed by a government entity, or it's conventional. So guys, the only difference between DSCR and what everyone calls conventional is that one is qualified and one is non-qualified. So Fannie and Freddie are qualified mortgages. But if you go get a jumbo loan, you go get a credit union portfolio loan, all these things that aren't sold there, they call them conventional loans, but they're not backed by Fannie or Freddie. And they are conventional loans. They're just non-qualified, right? So bank statement loans, alt doc, going to the bank and getting, like I got on one of mine, 100% financing with no MIP or PMI. It's a conventional loan, but it's not backed by Fannie or Freddie. It's a credit union. It's a 30-year term. That is a conventional loan by all standards. It's just not a qualified because it's not backed by Fannie and Freddie. Right? So DSCR is a conventional loan. So the only difference is how you underwrite those loans and what we look at. So that's clarity number 1. Clarity number 2 for it is that most people talk to people who don't understand it, right? So that leads us to number 2, the second reason. The second reason is that there's so many inexperienced people out there. Whether you're listening to agents, you're listening to lenders, you're listening to a coach online, you're listening to anybody who thinks they know what they're talking about. Even you could be saying, what about you? Hey, that's your choice. There's inexperience. And what I mean by that is, let's take a look at some of the biggest lenders out there in the country. And I know them. 3 years ago, they might have been doing $25 million a year in non-QM broker deals, right? Now, over the last 2 years, each year they're doing over $300 million, right? What that shows you is that prior to when the market started shifting, everyone focused on agency loans. Everyone focused on what they knew. It's also what they make the most money on. You didn't know that, did you? So now everyone's trying to learn the non-QM side, the non-qualified mortgage side, the bank statements, the DSCRs, all that, because it's harder to get Fannie Freddie financing. People are also learning DSCR because they realize, hey, I can charge more. 2, a lot of people are buying investment properties right now more than anything else, so they're trying to learn it. Guys, I have a unique role where I get to originate loans for my investors and clients I've had for a while. I also get to work on the wholesale side. So I get to see what a lot of brokers are doing and how they think and how they process. And I can tell you, you really can tell within one conversation if they know what they're doing. And I get it all the time. I've closed, 50 of these in my career. I know what I'm doing with DSCR. And I'm telling you guys, it is the rockiest thing ever. Like, they don't even know to look at the rent survey, right? When the rent survey comes in low and they're wondering why their rate's higher because it doesn't debt service, it blows my mind that an originator doesn't know the basics. So inexperienced lenders, brokers just don't help the cause, right? You already have a borrower who doesn't understand it. Then you have someone else trying to help them who doesn't understand it. It's the blind leading the blind, right? So it's very confusing. Work with lenders who specialize in DSCR. Work with lenders who have guidelines. Every broker out there has access to guidelines and matrix. But most of the time, they're not gonna find the answer for you. They're gonna call someone who knows what they're doing, their wholesale rep, and they're gonna ask for the answer, right? Because they don't know the answer and they don't know how to find it. That's not helping the cause, right? So number 3. Why there's bad experiences is going to be the hidden fees and costs. Let's break it down truthfully right now, guys. This is the truth about DSCR loans. You do not have to disclose. You do not have a CD out. You do not have a opening disclosure. You do not have a within, whatever amount, it's got to be disclosed and matched at the end. We've seen a lot over the last 2 years, 3 years, what's called bait and switch. You talk to a lot of customers who say, hey, I thought I was only paying 1 point in origination, an underwriting fee, and a doc fee, and then come closing time, they find out there's a third-party processing fee, and then they find out there's a broker fee, right? There's nothing illegal about that. Is it unethical? Absolutely. But there's hidden fees because people hide it. And the other thing about it is, it's legal. But like, I think of a lady that I talked to who came down to closing. She was buying in Florida. She's done 4 deals with this broker because they were told this broker was the best of the best in an investment group. 4 deals. This was her 5th, I think. Was it 4th or 5th? Whatever it was. And they were struggling. They couldn't get it clear to close at the end. And it wasn't until she reached out to me and I started asking her for her stuff so I could see if I can help her and beat it. I said, hey, do you realize you're paying 3 points in origination? It's actually broker fees. And she said, I had no idea because on the disclosure they sent her before closing, they were trying to get it to close. They hid it in a section down here. I think it was section N. When she said this was her 4th or going to be her 5th, I can't remember which one. And I asked her, I said, what about the other ones? She's like, all the other ones didn't have any fees. So I asked her for the closing disclosure. Sure enough, she's paid 3 points on every single one of those loans. And it's a lot of money. And I told her, I said, look, here's a quote from me. I'm going to give you a discount. I want you to take that quote and go save money on this deal. And I told her how to get the deal clear to close because they had an issue about something. The broker was able to ask their wholesaler and get it done. But she used my quote to save fees because I told her this is ridiculous how much they've made off you and they're delaying this closing. There's no reason you should pay 3 points. So there's hidden fees. Guys, not every broker does that. Not every lender does that. I truly believe there's a lot of good ones out there. A lot of times there's some sneaky ones out there, right? You have people doing DSCR loans that aren't licensed originators. It's perfectly legal. It doesn't mean they're bad originators. It just means they might not be held to the same standard as people who are brokers, who are originators, who are licensed, and who have been doing this. And usually those that do TRID loans know to disclose, know their reputation's on the line. They're not usually the ones that hide fees, right? It's usually the broker shops that only focus on business purpose loans because they don't have to be licensed. So be careful of those hidden fees, third-party processing and hidden broker fees. Be very cautious of that. The 4th reason is going to be simply, I'll put it this way. People are unrealistic about their income production or income property income producing, right? A lot of people just think it will do more than it will, right? We can't help that. If you have an originator like myself who does the due diligence, who pulls the comps, looks at 3 different online sources and tells you, hey, this property looks like the max it should do is this, but you think it should do 50% more, that's on you. Right now, you might know more and you might be able to get to there, but you got to set the right expectations. And this came up on a call this week where someone's like, why can't you use what I'm saying it's going to make for income? Because, dude, who are you? Right? You're not a third party company. You're not a reliable source. You're just a guy who's trying to buy. All right. Now, I get it. He has other rentals, but he wants us to take a property and do buy the room, which is a boarding house, which you can't do with DSCR. There is a way, but no one knows how to do that unless you really know the guidelines. And he wants us to take the income. He's like, well, it'll make X amount. Let's just say 10 grand by the room. If you look at every other rent survey out there, it's going to say 4,000, but he believes 10,000 because he could rent it by the room, right? So you got to set the right expectations. You got to set the right thing. Like, hey, we're depending on Airbnb. AirDNA shows it's bad. actual income shows it low. This person's asking too much money. This is what you need to have. Can it get there? Talk to a property manager. So you got to have the right expectation. All right, guys. Fifth and most. Ooh, this might be this might cause a little. All right, we'll just say it. So number 5 reason why people have a bad experience, I'm just going to say it, is because they've had a slow and inefficient process. And where that breaks down, it could be any matter of things. I have a buddy who was brokering through the largest wholesaler in the country of all loans, and it was just a terrible experience. The underwriter didn't know what they were doing. They didn't know, their right from their left. It just was an awful process. They kept calling me for advice. Hey, how does this work? All that stuff. I'm not even on the loan or getting paid for this, right? But that underwriter and that company is really bad at doing these loans, right? That's a terrible experience. It was a creative financing deal that was trying to refinance, and it was just a nightmare for that person. Another thing could be where if you work with an originator that doesn't tell you things up front that you need, and you just piece it together later on, that's a terrible experience. Now, we can tell you everything you need up front, but until we see certain things, we don't know if something else is going to uncover. Like, we get told all the time, hey, I want to close in an LLC. Here's my LLC. Great. That person might not give us the LLC for the first week. And then after 1 week, we say, hey, we need more documentation. This isn't an LLC that you own. Yeah, it is. No, this is an LLC that you have a trust or another LLC that owns. We need that documentation because we have to show proof that you own it. Well, why didn't you tell me that? You told me you own the LLC. If your name does not own that LLC, you don't own it. It's a layered LLC, which means another LLC or a trust owns it, and maybe you own that one. So there's breakdowns. There's also breakdowns with if you're dealing with a broker, right? Because there's a middleman, stuff doesn't always get uploaded. Stuff doesn't always get pieced together correctly. What they're doing is, in a lot of times, they're expecting someone else to review it, and they're not looking at it, right? Like, here's the most common mistakes I see when brokers are doing a process with DSCR. They don't know what to get for legal docs for an LLC. It's very basic knowledge, right? It's out there on the guidelines to exactly what to get. It's not that hard. So you might ask for like the LLC doc, and we get uploaded all the time. LLC docs that aren't even signed. Guys, those aren't legal documents, right? We also have problems where people are uploading running bank statements, and they think it's acceptable to take that. Guys, Fannie, Freddie, all these other loans, you need a bank statement. You need a correct statement with like a URL at the bottom. You don't take pictures of statements. Like, that's lending 101, right? So when you have these terrible experiences, it gets really, really confusing. I'm dealing with one right now where everything that we were told up front, asset-wise, we're not even using at the end because they didn't check with those assets. They thought the dude owned it. They thought the dude had permission, all this stuff. But it comes to find out he doesn't have any legal documentation that shows he is the trustee of a trust, right? So he doesn't have legal documentation to show proof that he has the right to move the money. That's a big deal, and that's causing an issue. So those little things make things bumpy, right? The other bumpy things are they don't know to put the LLC on the insurance. Well, guys, if you're closing in an LLC, the insured has to be the LLC. So a lot of people have bad experiences because they just don't know what to get because their originator, whether it's retail or a broker, if it's being brokered, they just don't know what they need, right? That's the difference with speed. The reason I'm able to close a deal in 4 days from start to finish was because I know everything you need, and I ask for everything. And when I read an LLC document, I can tell you exactly what I need from it, right? I am going to put this out there that I would say 95% of the time when there's a delay in a loan, whether it's an originator or a broker, it's because that person did not read the documents. What they're doing is they're blindly uploading. See it all the time on the wholesale side. They're blindly uploading stuff and waiting for someone else to read it. They're hoping the underwriter tells them what to do, right? I have this deal 2 weeks ago where the guy never read the appraisal, never read that it was subject to repairs, and never read that the income was lower, right? And yet he gets confused when it comes back and we're asking for, a 1004D, and we're asking for like do you want to pay more down because it's a non-debt servicing property, right? So the process needs to be smooth, but a lot of times it's not. A lot of times people just hand it off. You also see people hand it off and they give it to a third-party company and they hope that person can get it done, right? So just work with people who are experienced, work with people who communicate, work with you, and work with people who don't just want someone else to give them an answer. And I love these people. There's some people I'm talking about right now. I love them to death. They're brokers. I know them personally. But sometimes it's like, hey, have you thought about typing in the guidelines or the matrix and just reading for you? Like I get scenarios all the time. Hey, can you do a loan on a condo hotel? What's your minimum square foot? My answer is the matrix is right here. It says this. Did you read that? And their answer is, no, I didn't. What is it? Right? That's a terrible process. So if you're not willing to find the answer and you get upset when a wholesaler takes 24 hours to get back an answer, you can only imagine what the customer's thinking. And then the customer being told the truth up front, saying, hey, I don't know what I'm doing. I don't know the answer. Let me reach out to a professional who knows the answer. Right? That's not told to the customer because that just makes you look bad, right? I worked for a company. We were taught never to say that. We were always taught that it's an issue on the wholesale side and they got to figure it out. We were never taught to say, I don't know the answer. I got to call someone who knows it. We were always taught to say, oh, this is just an issue on wholesale. I promise you that's what we were taught at my former company, right? So, bonus tip. This is my bonus tip for all you brokers out there, originators and investors. Communication is key. Communication is key. Make sure you read your documents. I've been guilty of this where I've uploaded documents, I've asked for documents from a customer. I didn't look at them, and sure enough, something was in there. I'm guilty of that. We all are. But the thing is once I know about it, I know a solution, right? I don't have to wait on someone else to tell me a solution in most cases. So that's what makes the process better, is if you can adapt to what the investor gives you and make it work and find a solution. And 98% of the time, it's all in the guidelines, exactly what you need. This guy 2 days ago asked me how we can get a deal done with all these issues with assets because he can't show proof that the guy owns the business. He has multiple LLCs and trusts. Guys, it took me all of 30 seconds to tell him the answer. And it would have taken him all of 60 seconds to get the answer himself. This broker doesn't want to think for himself on this deal. And I'm okay with that. But don't call me, text me, email me, and get mad if I don't answer in like minutes, right? Because I work with a lot of people. The question was basically, how can we use assets? Well, if he would have gone into the guidelines or our great AI tool and said, what sourcing is needed for an LLC bank account, it would say no sourcing of large deposits. Boom, right there. Okay. What is needed to show proof of ownership of an LLC bank account? It would show operating agreement. It's right there, spoon-fed. But instead, they don't want to be spoon-fed. They want someone to chew their food like a bird and then give it to them, right? They don't want tough food or anything. They want it to be chewed like a bird feeding its baby bird. That is a terrible analogy. I don't know why that just came to me. That's terrible. Scrap that. Guys, again, I would say 60% of the people out there, originators, know what they're doing. Other 40%, originators, banks, agents, realtors, brokers, they don't know what they're talking about with DSCR loans. It's a bumpy ride, and it's always someone else's fault, right? Every time there's an issue on a loan, I audit the file right then and there multiple times. I always try to figure out if it's something we did. If it's something that we did on processing underwriting, we make it right. But most of the time, it's going to be on the originator side. And most of the time, it comes down to the same thing. They don't read the documents. And the same thing with originators, even within our company originators. And I can say I've reviewed files and talked to underwriters. It's things we're missing. It's very simple things. So guys, that's just my bonus tip. If you want to work with me directly or have any questions, call me. It's Nathan, the coach here with Nathan here at the lender. If you guys want to work with a broker because you just feel like you think brokers are better for whatever reason and you don't want to work direct with the source where the guidelines are and all that stuff and go direct, guys, there's reputable brokers out there I would recommend, right? And I always recommend people to talk to other people. I always recommend people to shop around. But at the end of the day, most of the times they're going to come back to me. The one time that I can think of off the top of my head where we were in process and it didn't come back to me, we didn't want that deal. And sure enough, a year later, she called complaining about how much she spent in fees with the broker. And now she can't refinance because they got a deal done at 20% where we wanted 25. And I told her 25 so she could refi. And at 20%, she wants to refi right now because she's not making the cash flow. And she wants to recoup all her fees because she paid 2.5 points in fees for the broker with a slightly better rate than us. And she has to bring cash to the table. So she's upset. It's a lady, literally, we fired. She was an unrealistic borrower. So guys, at the end of the day, there's people out there, vet them. If someone tells you no one does short-term rental loans at 15% down, I see this all the time on YouTube, Bigger Pockets and other sources. They're full of crap, right? You can do 15% down. It's just the cost of the rate. Most people don't take it because of the rate, but here at the lender, we do allow 6% seller concessions, up to 9% on new construction. So you can buy the rate down. So 15% could make sense, or it could make sense on a bridge loan. So guys, again, reach out to me. Let's see, what's next? Oh yeah, next video is going to be who should use a DSCR loan for a cash out refi. Stay tuned.